All right, ladies and gentlemen, I got your watch list coming into May 16th, 2019. And now you guys might be asking what happened today? What's going on? What's going on with the tariffs? We have to talk about that. It brings up some very, very important stuff. Here's the S&P. You guys saw it went up. We've watched TLT before, but TLT went up today too. So if you've been watching along, you know that is weird, and that's saying something. We got news from Warren Buffett. We finally know what price he bought Amazon at. So again, this could be a potential play. And then we had Cisco earnings after hours. Now, I was gone most of the day today. I still am sick a little bit, even though we are still killing it with the watch list. But we're going to be on in the morning. I should be good to go. I've been having a pretty good day so far. If not, Chad has always held it down. So much love to everybody. I love you guys. Honestly, that was amazing. So drop a like, thumbs up, all that good stuff. Let's get into it. We're going to be live 30 minutes before open, and comment your watch list below. If you do that, you're going to be entered in to win a free real estate boot camp, 1 month of the stream alerts, or a real estate stocks. Yeah, you guys know. Let's get into it. First things first, we have to talk about what happened today. You know, we came off. It was very surprising because we dived on pre-market, and now the question is why. And then we finally got one of those big moves I was looking for. It didn't gap down big enough for me, but it still kind of fell in line if you guys have been following along with what we said yesterday. But there's keys to understand what happened. Was there China news? Yes and no. China had really, really bad data. China's industrial production, also U.S. production, pretty much across the board, there was a lot of global economic. This was some of the worst data that we've seen in a very long time. All the expectations missed, everything from retail sales to industrial production, and that's for both China and the U.S. So those numbers were bad, and then all of a sudden today, we had a bounce out of nowhere. If you go look at the clock when this happened, Trump announced that he's delaying auto tariffs for 6 months on the European countries. So easing of the trade tensions with Europe, again, that was adding to the crisis. So now we only have to worry about China, and it kind of makes sense. U.S. and Trump wants to do that. He doesn't want to fight 2 trade wars at once. He's going to go side with the easy deal with the UK. We'll deal with them later. And he wants to handle China because now this brings up some important stuff because U.S. reported data, it wasn't that bad. Trump is out there touting and rallying how great and amazing we are. China even responded saying, like, why are they doing that? Like, they're saying their economy's not that good. But the main point here is China had really, really bad data. So, again, the U.S., that's why it makes sense why Trump is trying to put on the pressure. But this is what I really want to show you. We've talked about the yuan, how important this is with its weakening, but here's the key. Look at these last 3 or 4 days. The markets have made moves, and again, a lot of you guys are probably think these moves are very, very weird, especially when we had these big 700-point days. The news came out, Trump escalated the tariffs. It should be a lot more worse than that. However, it's not moving like that. Like I said yesterday, this is political now. So you're watching it, and really with the yuan holding up there 3-4 days, when the yuan holds stable, that's the government doing something. So with that bad of data and the yuan stable, I saw a tweet from that same Chinese guy I showed you yesterday. It's pretty much hinting the yuan is a political signaling tool. They're pretty much saying, hey, you know, when they're moving it, they're not really, it doesn't matter about the value. They're holding it. They're using capital controls. That was the question for the giveaway today. And, you know, they're waiting. So pretty much, I think this is kind of, you know, we haven't really got their official response of retaliation, right? When Trump started doing that stuff, the currency started weakening. I think that's them saying, hey, this is what we're doing. You know, they're going up to Trump. We ain't got no Twitter fingers. We out here. Let's just talk money. They're bringing it straight to the currency. The Trump talks, they weaken the currency, and they're saying, hey, this is what we're going to do because that data was bad. This should have weakened a lot, or it should have dropped a lot, but by them holding it up, that really is saying something. And now coming here, TLT. So you guys know traditionally, as we've watched this, if TLT is going up, usually the market is going down. That's not what we had here today. Even though we did gap down and bounced up, there was a decoupling from the bonds in that sense. So that means now rates are going down if the TLT is going up, but the stock market is going up with it too. So very interesting with that note, because if that starts to run and develop, this might even be a good time for those options as we've talked about, because it's not like as if it's moving up too much, but the fact that it's moving up with the market is that has way more weight than an inverse reaction. So if that continues, that could be a canary in the coal mine, whatever you want to call it. So watch that. Then we're also going to have Amazon. So again, we're still going to be watching the trade war and watch how that develops. And this is what I'm going to talk about. I'm going to show you with Cisco. We made that play. There's mispriced options everywhere. The market is mispricing a lot of stuff, and I want to show you that because now everything I'm telling you is all going to come full circle. So hopefully you guys are paying attention, because what's going on with China is going to connect here with the bond rates, and that's going to tell us something. But now China is signaling the political device and how that is making the markets gap down and bounce up and hold. This is creating an opportunity for options and option pricing, and that is where now Cisco comes in. We played the earnings today. Again, I was out most of the day, and I did end up putting out the stream alert when I did come on, and that was the only play I made today. I made a Cisco play. We ended up straddling it. I thought it would die more, but again, I went both ways, and that's what I said. I liked it because the contracts were cheap on both sides to go both ways. I think I went both ways for about $60 or so, and it was a good play because it was only pricing in a 1% move, and it moved about 3.5. So we'll see how tomorrow is, but I want to show you guys that option chain and some of the other options and talk about that, because that is showing something. And now seeing how the market is behaving, that's going to be one thing. But also coming back to Amazon, I'm going to watch that too, because depending on how the market reacts, Warren Buffett got shares at 1871, and they have I forgot how many shares, but it's about 904 million or 940 million, just shy of $1 billion. So Amazon, owned by Warren Buffett, we saw the effect there. If he bought it high, honestly, when you pull it up, you're gonna be like, dang, Warren, he got it pretty, And I don't know, was that, I think that was the date, or I think it was somewhere around here when he said he bought it. So he got it high, but decently a better price. So we'll see how the market reacts to that and what the market thinks of that, because the market can definitely trade off that. So there's that. Let us get now into the options chain. Actually, no, before we do that, again, it's related to TLT. We got to go over some of the quick plays for you guys. Wells Fargo is one I'm going to like in bank stocks tomorrow, because market gap down, bounced up, but Wells Fargo went down now, and that's what I noticed. That I lost on some other puts, like my GM puts. Those got clobbered today, but I noticed when I looked in the portfolio, I was like, hey, why are these up? Surprisingly, I was down on them. So Wells Fargo came down again. Watch for any companies not performing with the market. You see them start to give up and gap down, that they could really slip here. And again, related to what rates are showing, I really think financials is going to be a really good swing trade that's setting up here. So I like them. Next two is another main one we'll be watching. I'd even watch Cisco tomorrow too. We'll see how that moves. It's not supposed to be a big mover, but if it does get some gas, and then there is, the options there, it's going to be the weeklies. We're going to talk about some of those, or even then, not even the weeklies, just the fact that the IV could drop from it, but it could have a good continuation. But watch JD. I have contracts in the money that I'm holding on here, so I think that's going to be a good play. We've been playing that since Mondays when we got in. Been real Monday or Tuesday, I think. It's been killing it now. The contracts are expensive, so this is going to be one I would, if you're already in JD, great, you could play it, but I'd wait for it to come down. But it's kind of trading like Qualcomm was in a very weird way. So watch out for that one. I like that a lot. And it was even weird. If you guys saw today, people were saying like Boeing was crashing. I think we should watch Boeing too, because again, given kind of how the market is, you could see how the market looks. It looks like it's the S&P just at a lower rate. I want to see how Boeing gets affected here. It's kind of crazy to think about. Like we said, it's still holding below 340. So that's Boeing. We like it. I know we have NVIDIA coming up. Their earnings, you guys could watch those. I think the chip makers are going to be very, very important. But beyond that, here's a play. We've talked about it, but now I again watch the bank stocks, but I want to watch this as well. It applies the same logic here today. Home Depot, they look like they're falling off the cliff. Most things kind of have a bounce to it, but I think Home Depot could go down. And some people were asking today, because we're going to start getting, a lot of the data that's been coming out has been really, really bad. Industrial production, all that. We're going to start getting the real estate data, I believe, tomorrow. New home sales, construction, and all that. So all that could have an effect. So keep your eye out for that. And then yesterday, too, we put it on the watch list. I'm going to still watch this. It had a crazy move this morning and leveled out. I'd watch for something similar and see kind of how it moves. But if, as you can see here, EA looks like it wants to fight back a little bit more. It's kind of been holding. I'm really liking that. I honestly think EA can make some. I'm not a big fan of playing these. So we'll see how they are in the morning. And hopefully you guys are there pre-market. Hopefully I'm there pre-market. And we'll be able to see how those are holding up. But that can make a quick move. I like it. I think it's setting up for something nice. Now we could get to the option chain, my friend. So let's right off the bat, I'm going to tell you guys mispricing. We did this on the live stream today. We were looking at Cisco right before it reported. So now it's at 53, but I believe it was at what? 52? Yeah. It was at 52 flat, and if you did the math, at close, this is how we do the pricing. So if you guys aren't familiar, you take the week that it's going to expire, and it pretty much, whenever it expires, is telling you what the market is pricing by that time frame. So if it's 1 week, it's saying by the end of this week. If you pick the monthly and do this calculation, it's saying by the end of the month. But you pretty much say, hey, at $52, that has, it's in the money, so you're paying straight up premium $1.51. If that contract expires in 2 days, you're pretty much saying, or the market maker saying, they don't expect it to move past $1.51. So you do the math there, $1.51 divided by 52. You're left with about 2.9%, and that's what it was expecting. And that was on the May 7th. I think it changed because when we did the calculation, it was pretty much pricing in at 1.6, and I think that's actually a way there you could kind of see the pop right before it closed. There, it started to move. But when we were looking at it, it was pricing in 1.6%, and I put that out on the stream alert. You could see it here, saying it's pricing a 1.6, 1.8% move, and that was fairly low, even on both sides. Even now, when it shot up, and that even dropped the calls, but the calls were only pricing in $1, which would have been about 1% move on there. So it wasn't that big of a move, and then that's where even as you got out to June and did the same pricing, I believe on the 52s, even like a what? Or the 50s, yeah, and it was like $2 in the money. It was only pricing in $1.45 for June, and that's saying in 30, 40 days it was only going to move again about 1.5 or 2% or 2% or so, even at the top end. It looked good even on both sides. And then you go and look at some of these contracts. You could pull up the Junes. Every single one of them, they were very, very expensive, and recently they've all been capitulating, and that's because Cisco did have a big move, especially when you look at the May 17th. So I think I got the Junes. So I got the June. See, we didn't even play the weekly, so we went out to the Junes. Which ones were? I got these 60s for 8 cents. These were the calls, so they're probably not going to go up that much. We're going to see, but I will look to maybe make a play on them tomorrow. But again, this is the whole idea I'm trying to show, is that even Cisco, when you take a look at how it's been trading, for the most part, this reflects the option price, but the stock wasn't dropping as much, but the contract price really came down, and Cisco isn't a big mover, and that's what I said at the end of the day. When you look at its chart, even how it reports, it's not supposed to move big. However, when I was looking, saying, hey, it's pricing in about a 1% move for about a month or so with earnings, that's pretty low. So that's where I was saying the contract is mispriced, but then that's where now it leads to what I want to, it makes sense, because now even those small moves, like a move like this, that's what I'm saying, is that when you look at Cisco, what killed the contract price, it had earnings all the way up until earnings, and look at any of the calls. They plummeted. But the key, and they didn't bounce up with the market or anything. These all have a lot of time on them, which is kind of crazy to think about, even if you go down to July. But that's what the whole market did. It's not like Cisco was unique and died. That's what everything did. So the volatility was high, shoots right back down, but it even came back down and gave up even the earnings premium. It just got even cheaper, even despite the earnings. So that's where I was like, okay, they were high, they're low. It's not expected to do much, but now coming in, what I'm saying, a lot of stocks are going to start doing this. If the market becomes this political signaling device, and we're going to have a couple days or a couple weeks of the market holding up, it's going to mess up volatility, so that whenever there is a real move, just like we saw there, the move is going to catch up and the contracts are going to be very, very grossly underpriced. So that's where we could take advantage of it. So watch out for that, though. But that's what's going on here with Cisco. Looking at it, and I said it was cheap too, because I could have played multiple contracts, both sides, and still spent less than $100 and have that much time and earnings. It's still a gamble. It's still, again, because I said it's a low volatility stock that really shouldn't move, so you can't expect too much. But be able to get both sides, and then what you're paying on both sides is still pricing in a small move, it makes a little bit more sense. So that's why I grabbed them. So I like those. That's what I'm going to be watching for tomorrow as well, too, to see how those play out. But another thing I want to talk to you guys about, pushing it into the wall. I saw some people in the chat talking. They're like, what does that mean? What does that mean? The strategy of pushing it to the wall is here. The wall is the expiration date. This is your closest wall. What I mean by pushing the contract into the wall, find the contract you want. So tomorrow, this is what's going to happen with Cisco. The fact is they're May 17th. So even if the contracts are too expensive, it's Thursday, the wall's tighter. But what I mean by push it into the wall, the closer it gets to the wall, one by one, these contracts start falling off in value. Theta, time decay, time decay, time decay. So what I tell you guys to do is find the contracts, even if there's something moving, like even Roku, if that's killing it, or Disney, you find the contracts that are expensive and that went up. So tomorrow, let's say we even get another $1 or $2 move, and that'd be a lot on Cisco. But let's say it opens at 55. It'll open at 55 for a little bit. That'll be super expensive. It'll go to like $1, $1.50. But then when it drops in the morning, it's going to drop again. But now if it doesn't drop below this price of 27, you push it into the wall, wait till tomorrow. So it is going to involve playing weeklies. You guys got to be careful. But I'm telling you, with the market being the signaling device, the same thing applies. You guys get time because you do not want to miss it when it happens and when it comes out. And that's what I'm expecting here. Just like Cisco, I like these moments, and you got to be patient. That's what I'm saying. Be safe and protect your money. Because wait. Let the market have, a lot of people like to complain about the shenanigans, like, oh, it's manipulated, this and that. It's setting up an opportunity for you. So let them hold the market, install, and do back and forth, because what's that going to do? It's going to artificially drive the IV lower. And again, keyword, artificially. So it doesn't mean the volatility is going to disappear, but by them artificially keeping the market up, so again, it's like they could manipulate it, but there's a cause and effect relation, shout out to free markets, right? But so although they can't hold it up, there is going to be a counter example, and that's why I'm bringing up, watch what the bonds start doing, watch what all this other stuff starts doing. So it's going to be an exciting week. You guys want to keep your eyes out for it. And now, too, this is even bringing up, if we do, let's say, see a big move, a flash crash, anything, value stocks, go after McDonald's, even on the put side, if that's the case. But watch how this develops, because if McDonald's is at $1.99 flat tomorrow, this is going to be a good one for pushing it to the wall. So this is what I mean. These 200s are still really expensive because it's 56 cents. There's 2 days. I mean, it could go up, but think about it. It has to go up $1 and then 56 cents. It might not go there. I think it could go to 202.50. But here's the deal. Even these 197s could get pushed into the wall. Let's say tomorrow morning these drop and it falls out of the money. But the whole idea is to be able to get these fit for 56 cents, even cheaper. Or even the next weeks you could low-key kind of push into the wall. But let's see those 202.50s. Like, if we could get these at 30 cents, I'd like those. Yeah, they're holding up a lot of premium. But again, so of all these contracts, you wait till it gets cheaper and cheaper. You're pushing it to the wall, even though the stock could go up or stay the same. The wall is here. Every day, as long as it's not in the money, that's going to lose value. So take advantage of that. I'm going to watch McDonald's tomorrow. Another good example, a great candidate, because it's been going up and has volatility, push it to the wall. JD, the contracts have gone up a lot. They were very, very cheap. So if some of these fall, like these 30s, if they fall out of the money, they could follow the money. Time decay could kill them real quick, and they could drop, but then they could quickly bounce back up. It all depends, though, on what the market does. So Facebook did that as well, too. So watch out for those. But besides that, I'm going to be keeping my eye out for that and the timing and being patient, because like I'm saying, if we see what's developed and as the news and more news comes out, we're going to be watching, again, China and seeing official responses and how the market responds to that, the banks and the rates and all this. It's going to be exciting, but all we have to do is see what happens and then see where the pricing and the options is creating an opportunity. So I'm going to see you guys in the morning. I love every single one of you who was there today and participated and held it down. You guys have no idea what it means to me, so I can't wait to show you and give it back to you even 10 times more. So you guys are awesome. I love you. I better see you on there in the morning. Post your watch list and let's go.